Hi there traders, this is Steve Miley for FX Explained with another macro watch looking out into the week commencing the 15th of July. Well, let's do a little recap first of all of what we had last week. Last week's key event was Fed Chairman Jerome Powell's testifying before Congress. Published on Wednesday, the initial testimony. Markets liked it. He stayed dovish, continuing to talk about global headwinds, continuing to talk about the lack of US inflationary pressures, and this has been echoed by various Fed speakers throughout the last week. And now the possibility remains, we feel, for the market is still holding out for a 50 basis point cut. We do not expect that cut to come through at the end of July, more looking for a 25 basis point cut at the end of July, but then with probably some kind of guidance for further interest rate cuts going into this year. So probably disappointing the market maybe at the back end of July, not delivering a 50 basis point cut. But the market had become concerned, we feel, that given that the US jobs report that we saw earlier in July, the jobs report for June was very strong, there was real risk that the Fed shifted to slightly more less dovish, moving away from their very dovish position. They kind of maintain that dovish position, and that leaves the door open to further rate cuts. And then what that means in here is that the US dollar has weakened across the board against most major currencies after Jerome Powell's testimony. More dovish tone from the central bank equals a weaker currency, that is a weaker US dollar. So most currencies rallying against the dollar in here over the last week, the second half of the last week. And then this dovish tone also sending equity markets rebounding, European and Asian equity markets rebounding, US stock indices, the Nasdaq, the Dow Jones, the S&P 500 all hitting all-time highs. Now let's take a look forward to what we have coming up this week. So critically this week, at the beginning of the week, on the 12th, the 15th of July in here, we're kicking off the week with the GDP report from China. It's going to be important to see how global growth is going, how the Chinese economy doing. So global growth data, Chinese data, reflecting the global economy in here, early on Monday the 15th. Moving forward to Tuesday, then we have the, not shown on here, but we do have the RBA meeting minutes, and then the UK employment report here, and then as we go into the day, the US retail sales report. Moving through now to Wednesday. Wednesday we get the UK inflation report in here, the standout being the CPI data, and we also later in the day then get at 1:30 London time in here, we get Canadian employment report, Canadian CPI. Moving through onto Thursday, the Australian employment report, and we end off the week in here on Friday with the US Michigan Consumer Sentiment Index. So those are the main macroeconomic events going into this week. We also have, guys, earnings report kicking off this week. Okay, so earnings report kicking off, and we're on investing.com here. But Citigroup in here is the main one to watch on Monday. The financials usually kicking off the earnings season here in the US. So Citigroup, JP Morgan, Wells Fargo and Goldman Sachs then on Tuesday. Also with Johnson & Johnson, J&J. And then in the UK we have Burberry on Tuesday, Bank of America on Wednesday, and the much watched Netflix, the reflection of the US consumer. Watching out for that also on Wednesday. Moving through into Thursday, we have, Thursday in here. We have Bank of America Thursday. Bank of America coming through on Thursday, and also Morgan Stanley. And as we move, also Microsoft. Don't forget Microsoft also on Thursday. And then finishing off in here, going through into Friday, we have American Express and BlackRock. Okay, so I think actually Bank of America was on, Wednesday. So Bank of America Wednesday with Netflix. Thursday then we get United Health, Morgan Stanley, and Microsoft are the standouts on Thursday. Okay, guys, that's it. So watch out for the earnings coming through. They could impact on the indices and the major stock averages, particularly in the US. If they hit those stock averages and impact there, they can also then have follow-through effect into the foreign exchange markets, and keeping an eye on all that macro data we have. And then also any impromptu Fed speakers that we have, maybe reiterating and reinforcing views that we already have in here regarding the dovish tone from the Fed. This has been Steve Miley for FX Explained and our regular macro watch, and I'll speak to you again soon. Have a great trading week. So traders, don't forget to catch us on the next FX Explained macro watch and all the great content on fxexplained.co.uk.